Hi, this is Dave Myers with a new screencast regarding how to use your financial statements to check to see how long your existing liquidity can sustain your business operations. In other words, if you weren't going to sell another product or service, how long could you continue operating? The test is simple to calculate and gives you an idea if your current liquidity level is providing you with an adequate safety net for adverse economic conditions. This isn't a ratio that you'll find in a financial textbook. It was taught to me by my supervisor when I was working in banking doing small business analysis. The first thing you need to understand is the concept of working capital. If you're only going to learn one thing about balance sheet analysis, learn this. Your working capital is your current assets that are cash or can be converted to cash in less than a year, minus your current liabilities, debt you owe in the next 12 months. The higher working capital is, the higher your business's ability to weather fluctuations in revenues. In addition to working capital, we'll want to know what our daily operating expense is, what it costs our business to keep the lights on and employees coming to work each day. To calculate this, we divide the year-to-date operating expenses by the number of operating days. And to calculate our ratio, telling us how many days our business can sustain operations without relying on new sales, we divide working capital by our daily operating expense. In order to calculate the ratio, we need a couple of reports generated. The first one I'll do is I'll create a balance sheet. I'll just use the summary one. We only need to calculate working capital. We don't need all the sub-accounts. So once we have this open, we can just export it to Excel. Now I can fix the column width here by double-clicking between the columns, and I'm going to shrink down the F column because I'm going to paste the profit and loss right next to it and make this fit to one page, and then I can Alt-Tab back to Quickbooks, and I'll minimize the balance sheet and go back to the report menu and generate the profit and loss report. I'll collapse the sub-accounts. We don't need all this detail, just the total operating expense. And I'm going to change the dates of the report here to this fiscal year to date. And I'll export this report to Excel also. Now Excel puts this in a new workbook, but I want to put the reports side by side. So I'll highlight the whole thing and Control C, and then I can do Control Page Up to move back to the previous tab, and I'll just paste it right in here with Control V. And I'll fix the column width. And to give us more room, I'll align the profit and loss header to the left, and I'll merge across all the header rows for this report so I can shrink the numbers over to the left so they're more side by side. I'll shrink up the column here to the right and widen the next one so we have room to put in the headers for our ratio information. First, I'm going to put in current assets, current liabilities, and with these we'll calculate the working capital. And for operating expenses, first we'll calculate year-to-date operating expense. And from that we can get the monthly operating expense. And from that we'll get the daily operating expense. And with these we can calculate our days of operation ratio. And I'm going to use the Control key and highlight all of them. And just to make them stand out a little bit, I'll do Control 1, and I'll pick a fill here. How about maroon? And then because it's a dark color, we'll choose a white font. I'll widen the column to the right for our input cells, and I'll use the Control key to highlight all of them at once. And I think I'll use cell styles, and I'll choose the input style. And let me give them a number format, and I need to widen the row headers a little bit. For current assets, we'll type the equal sign and go over to total current assets and click on it once and hit enter. For current liabilities, it's the same thing, equal sign, and I'll scroll down and find total current liabilities. Click on it and hit enter. and working capital, the equal sign, current assets minus current liabilities. We can pull the year-to-date operating expense right off the P&L, so we just type equal, and we'll have to scroll down a little bit, click on total expense, and then enter. Now, since we have 11 and a half months of results here, I will divide our year-to-date operating expenses by 11.5 months to get our monthly expense. And to estimate our daily operating expense, we will divide our monthly expense by 30. Now that we know what our working capital and daily expenses are, we can calculate our days of operation ratio. We'll say equal to our working capital cell divided by our daily operating expense. Here we can see that at this point in time, our business's working capital affords us an operating cushion of 136 days. Now, one drawback to financial ratios involving the balance sheet is that they're only valid for one point in time. So sometimes it's useful to examine trends in the ratio. So I'm going to go to columns and change this so it's broken out by month, and I'll export this to Excel. Quickbooks is going to put this into a new workbook, but I want to put it in the old one. So on the ribbon, I'll choose View and Arrange All. And horizontal is fine, and we can see them both at the same time. I'll hold down Control and just drag it into the workbook we were in. I'll close the new workbook, we don't need it, and expand the old one. I'll rename this sheet Monthly, and I'll fix the column widths and the page width. I'm going to create a new sheet, and I will call this Trends. And let's insert the row headings. We'll start with the months, and then working capital, our daily operating expense, and then we'll calculate the days of operation monthly. I'll flip back to the balance sheet, and I'll highlight the months, and Control C to copy them, and go back, Control V to paste them, and I'll fix the width. For working capital, we'll go back to the balance sheet, say equals current assets in January minus January current liabilities, and then enter. And we can grab the autofill handle and pull it to the right to fill it in. I'll give it a number format, and need to widen the columns again. Our daily expense we already calculated, so we can just say equal, then Control page up a couple times. Click on the cell where we calculated it, hit enter. I'll make February equal to January, and then also autofill to the right. And our days of operation ratio equal to working capital in January divided by our daily expense. And once again, we can just grab the autofill handle and pull it to the right, and we can take some decimals away. So now we can see the fluctuations in our working capital cushion over the past year, but it's much easier to absorb the information visually. So I'll highlight the entire row, then I'll go up to Insert, and I'm going to choose a line chart, just a simple line chart, and I'll give it a design. And here we can view the trends in our days of operation, where it has gradually grown over the first 11 months of the year, then declined sharply in the most recent month. So this indicates that there was either a decline in current assets, an increase in current liabilities, or both. For instance, cash being used to pay down long-term debt.